welcome. You're watching Ask Profit on NDTV Profit, and I'm your host Himakshi Bahugna. Along the next half an hour, I'll be taking up all your stock-related queries. So don't forget to WhatsApp us or call us directly. The numbers are there flashing on your screens right now, viewers. And on the show, I'm joined by Mahesh M. Oja on the fundamentals and Gaurav Sharma on the technicals. Welcome to the show, gentlemen.
Good evening.
Good evening. Now let's get started with the first query written to us from Manoj. He hails from Surat and holds 120 shares of NHPC. He bought it at 1112 rupees. So firstly, coming to you, he hasn't mentioned the time horizon. So Mahesh, I'd like to take your fundamental view on it. How are you viewing NHPC? You know, it has also come out with its numbers there.
I think stock has potential up to 110 from near term. That could be a 6 to 9 month horizon. But currently, we are seeing some consolidation type of move. So after above closing 92, we may see some kind of upside. But yes, 110 level could become in a 1 year horizon at least. So you can keep hold if your horizon is more than 1 year or 1 year.
All right. And Gaurav, if I look at the charts, it's pretty much like in a downward trend there. So what are you anticipating? What are these charts suggesting?
Yeah, you have rightly observed. The stock is not looking good at current juncture. Little more, slippage from here will lead to a breakdown in this particular stock, and which might take it towards 75 and even 70 levels in the immediate near term.
All right. Thank you so much for that. Now, before I take up another WhatsApp query, just a quick reminder for our viewers. Viewers, half an hour is your golden chance to get all your stock-related queries answered. We have our experts there. So, please make full use of this opportunity and just call us. We are waiting for your calls. And we have Pooja's query with us. She hails from Pune. And she's asking whether it's the right time to enter TCS. So, Mahesh and Gaurav, one by one, I'll come to both of you. With the news coming off about the layoffs that the company is planning, the stock has seen some reaction there because of this news. And, all the tech companies are, we are hearing that a lot of them, one after the other, they're just shedding their employees. So, on the back of this news, how are you viewing the fundamentals also of the company? Is it like a vice versa effect happening?
Definitely, if you're looking from a TCS perspective, they have taken good steps. In terms of if you're looking from a margin perspective, TCS margin has shrink. So I think it's a good step taken by management, and normally they are taking slow and steady steps, but this time as particular sector is not performing well, so this hard step been taken. But yes, these are the good steps for future. I think if anyone looking from a longer term perspective, they can accumulate in a staggered way, not one way or one shot buying in these level. But yes, staggered way buying could be a good opportunity. I think if any downside could be continued, we may see in 2,900, 2,800, 150 odd level because trend is very weak. So staggered way buying can be a good ideally opportunity.
Okay. And Gaurav, I'd also like to take your view on it. What is the sentiment like? And I can see the charts, they're just falling. So what's your sense?
See, since the beginning of this year, especially after Trump took oath and, assumed office as president of the United States, Indian IT sector has been, feeling the heat. TCS has been no far away from it, and what we are seeing is a continuous profit taking. From levels close to 4,500, currently the stock is trading around 3,085 odd levels. 29, 25, 50 is a good support zone for this stock. I don't see the stock going below that mark. So I think that is one price point that one should consider taking kind of a fresh entry, or if somebody is having, then one can even consider averaging around that level.
All right. Thank you so much for that view. Now we are joined by our first caller on the show from Mysuru. Hi, Vishwas. Good evening.
Hi, ma'am. Good evening, ma'am.
Yes, please go ahead with the query, Vishwas.
Ma'am, KPIT technology 600 quantity and average price 1,300.
Okay.
Profit in loss, ma'am, 65,000, ma'am. 3 months starter, ma'am.
Okay, and for how long are you planning to hold these shares?
Ma'am, 3 month old.
3 months.
Back by, ma'am.
All right.
Yes, ma'am.
So, trading view on KPIT Tech, Gaurav, directly coming to you, it has dropped down to 1193 levels. He bought it at 1300 levels and is sitting on a significant loss there. So, what do you make of the charts? Because I can see again the stock is falling, regressively. So, what's your sense?
Stock is still looking weak. I don't really see a meaningful respite from these levels at least. So my suggestion would be to take the hard step, start offloading the positions because the time frame is just about 3 months. So it is little difficult. I see the stock heading towards 1100, 1050 within that time frame.
Oh, okay. Thank you so much for that. Now we have Shubham joining us on the phone line from Bengaluru. Hi, Shubham. Good evening.
Yeah, good evening.
Yes, please go ahead with the
I'm
query.
having Wipro 100 shares at the price of 245.
Okay.
So my question was, I am having some fun. So I was thinking to start accumulating the large cap IT stocks as they have been fallen from 30 to 35% from its high.
Yeah.
So for 2 to 3 years view, can I start accumulating it or should I avoid?
Okay. So for accumulating levels, I'd like to go to Gaurav. But before that, talking about the IT space in particular, seeing a bit of a pain there. And at these times when the stocks are falling, so Mahesh, do you see it as in buying opportunity for our investors, because like he said that he wants to invest in it, so he is seeing that the stocks are falling. So is this a good strategy to invest?
Definitely, if you're looking from an IT company's perspective, they have a good cash in books, they have a buyback history, they have a good dividend history. But current market structure is showing some weakness, and Indian companies are not looking to expand more towards AI. I think that is the most reason that we are seeing some kind of pressure on all the IT companies. But if you're looking from a IT company's perspective, I think Infosys could be a good pick from these level also because Infosys is doing well, and comparatively, if you're looking from the other peers, Infosys numbers are pretty good compared to other. So I think Infosys can be accumulated on these level. Yes, Wipro, if you like to accumulate, then staggered way accumulation could be done lower level. If we any downside, we may see 242 to 238 range. So I think these both counter can be accumulated. First preferred will be Infosys, and second, I think Wipro can be also added.
Okay. And Gaurav, I'd also like to take your view. Firstly, IT space, what's your outlook? And secondly, for somebody who wants to accumulate more in Wipro, so what are the correct levels that you suggest, or do you suggest some other counter?
Yeah. So firstly, as far as IT sector on the whole is concerned, from a charts perspective, I don't see much of a downside here. Rather, I'll be interested in looking at the nook and corners where the stocks are placed around their support levels and start accumulating them. I see IT as a space which could likely provide a cushion now because they have already fallen down, too beaten down now, and this is the time for them to start, consolidating and start posting some kind of a reversal up move. Now, when we talk about Wipro, I'll suggest him to start accumulating the stock in range of around 230 to 200 odd levels. This is the price band where the stock has spent a lot of time before it started its up move. So it is most likely that the stock will come down to test that level again, and a recovery can be seen thereafter.
Okay. Thank you so much for that. Now we are joined by Dheeraj on the phone line from Hyderabad. Hi Dheeraj, good evening.
Good evening, ma'am.
Yes.
My query is regarding NTPC Green, ma'am.
Okay.
I purchased 2,500 shares of NTPC Green around 110.25 rupees, ma'am.
Right.
Actually, today they declared the results like an hour ago. So can I hold it for the next 1 month, ma'am? Can I expect a target of around 115 rupees? 115 rupees is my query, ma'am.
115.
Otherwise, should I shift to something else? Yes, ma'am. Otherwise,
right.
should I shift to something else like Adani Green, which
Okay.
posted a good result, ma'am?
Yeah. Understood. So Gaurav, without wasting much time, I'd like to come to you. So NTPC has come out with its results, and they are pretty decent numbers. Net profit up 59%, revenue also up almost 18% there. So healthy numbers posted by the company. So do you see it, reacting in a positive manner tomorrow in trade, and also if at all it can touch the 115 levels?
Firstly, the stock traded in a very, both ways. Actually, I would say it went up initially, and in the later half of the session, it, felt the heat. I think that was with respect to the markets overall. Overall structure is fine, but it is still difficult to say whether the stock will be able to test 115 odd levels or not. They are not too far either. But the kind of structure, it is still a sideways kind of a structure. What I can see is, I suggest him to take a stop at 102, hold on to the position. Yes, the level is possible, but within a month's time frame, that's still a question.
Okay. Thank you so much for that. Now we have Mayur joining us from Jalgaon on the phone line. Hi Mayur, good evening.
Hello.
Yes, please go ahead with your query, Mayur.
Ma'am, my query is about I have taken the share of CIE Industries. At
Mayur,
480.
I'd request you to please turn down the volume of your television screen because I'm unable to hear you properly.
Yeah, ma'am. 1 minute. Hello.
Yes, please go ahead with the query quickly.
Yes, ma'am.
There's a lot of noise, Mayur. Yes, now it's fine. Can you please proceed with your query? I think we've lost the line there, but we have Mayur's query with us. So CII Automotive is the counter. He holds 200 shares at 435 rupees. He's looking for a short-term view on the counter. He hasn't mentioned the time horizon. So Gaurav, directly coming to you, how are the charts looking like?
Stock is not at all looking good, trading in a low kind of a pattern, unable to sustain at any of the higher levels that it has attained in the recent past. I suggest to exit the position.
Okay, so exit, a clear-cut exit on the counter. Now we have Prasad on the phone line from Bengaluru. Hi Prasad, good evening.
Hi, hello. Thanks for taking up my query. Well, my query is to Gaurav sir.
Okay.
I have been holding my DAM Capital Advisors allotment that was listed last year. I have been holding it based on the company's past and the decent valuations that it has.
Yeah.
Now, it was a prominent player in the capital market space, but the Q1 earnings were terrible. But the commentary does give a bit of hope, saying that it has quite a bit of IPO launches in the pipeline.
Yeah.
Now I would like to hold it for quite some time.
Okay.
Let's say for the long term. Now the question is, should I add some more so that my price comes down a bit at the current levels, since it's been falling rapidly?
All right. So Gaurav, you heard the query there. So what's your suggestion to Mr. Prasad, because he has directly posed the question to you?
Mr. Prasad, the stock is not performing, and the reason is that the earnings are not supporting. Still, the recent the earnings were not at all impressive. They were posting very weak set of numbers, and that is indeed why the stock is trading in a low kind of a pattern since it just got listed. My suggestion would be you should consider shifting the stock to something like a Shriram Finance.
Okay. So shifting from DAM Capital to Shriram Finance is what Gaurav is suggesting. And with that, let's just go across to a caller joining us from Chennai. Hi Shankar, good evening.
Hello.
Yes Shankar, please go ahead with the query.
Yes, I am Shankar from Chennai. Good evening.
Good evening.
Already I have around 20 stocks in my portfolio. All the enquiries about my stocks already inquired it. Now I want fresh buying for multi-bagger. This time I want some very handsome returns for a coming uptrend market. So if you are able to give very strong uptrend stock for
All
long
right.
term, like multi-bagger stock.
All right, got it. So Mahesh, I directly come to you. So multi-bagger stock recommendations, Mr. Shankar is asking, so do you have any?
I think data center theme could be keep in mind. Antraj type of stocks you can keep in mind, and other than the transformers and these type of stock, I think can re-rate in further in upcoming time. That could be skipper and all these type of stocks. So data center story keep in mind. I think in any lower you can accumulate data center story. Anantraj, I think KNS technology and other themes which are the looking attractive. So that stocks could be you can buy for a 1 3 year horizon at least. So these stocks can be at least give double return in 3 year horizon. So these can be looked on basis and other stocks on these sector can be looked up.
Mahesh. So I think Gaurav, I'd also like to come to you because I don't want to miss this chance. So what are your top multi-bagger recommendations there?
I think this question is the gist of the market. Every single person comes to market just to get the answer of this particular question, and even we too keep doing all our hard work to hunt down these kind of stocks only. So I think what he has asked for is the pearl from the bottom of the seashore. Now, I think the renewable energy space is something which is gaining pace. It is having good kind of government support as well. So this space is something if held for say next couple of years, 2 3 years kind of. So stocks like Bari Energy, Renewables, Suzlon, they can actually outperform and surprise come up with surprise numbers. So these stocks can be considered.
Okay, so Vari Energy, Suzlon can be considered as multi-bagger options there. That's what our experts are suggesting. Let's go across to Geeta joining us from Bengaluru on the phone line. Hi Geeta, good evening. Geeta, are you there on the phone line?
Yes, ma'am. Good evening.
Good evening. Please go ahead with the query.
Thank you for taking my query, ma'am.
It's a pleasure,
my
please.
query is regarding CDSL.
Okay.
I have 75 shares.
Okay.
Bought at 1399.88.
Okay.
I'm in profit with 9,219, ma'am.
Yeah.
My query is, can I hold it for 5 years?
Okay. So, Mahesh, CDSL is the counter. So, are you bullish on this company for somebody who wishes to stay in it for like 5 years?
If you're looking on number basis, the number company posted a weak number. So I think some profit booking could be coming from these level also. That could be we can see some kind of lower. But yes, if you're looking from a 5 year horizon that you can hold. But yes, in near term 3 to 6 months, I think some downside could become. So from current view, you exit and re-enter at a lower level could be a good advice on this sensor.
Okay. And Gaurav, do you have any view on CDSL?
I have a very clear view on this stock. Yes, rightly pointed out by Mahesh, some bit of downside is there. But from a very long term perspective, as she is looking for, I think 4 or 5 years kind of a perspective, the bigger question would be why not to invest in CDSL? Because, when in our country we are just about 20 crores trading accounts here, a long way to go. We are on set for, a maturing market here. The interest rates are declining. So it is quite eminent that the stock market participation is bound to increase, and hence the business for companies like CDSL will certainly have their share in this market. So I am bullish from a long-term perspective on CDSL.
Okay. So our experts are pretty much bullish on the counter, and we are joined by Manish on the phone line from Mumbai. So hi Manish, good evening.
Good evening. I've got Denta Water and Infra System.
Okay.
I bought 50 at the rate of 330 day before yesterday, and then small cap started going down like anything.
Yeah.
So the overall picture of small caps, should I exit from other stocks also, and should I book loss in this?
Okay, and are you a long-term investor or a short-term investor?
Yeah. No, I can hold for a year, 2 years. There is no issue about that.
Okay. So, Mahesh, I'd like to come to you because the stock is witnessing a sharp downtrend. So should our investors be worried about it, or should they stay patient?
I think if any downside nearby 290, 295 zone, you can add further. Current downside is not from a fundamental perspective. I think due to markets facing some pressure, this stock also face some pressure. So any downside could be added nearby 290, 295 range. I think stock has a much more potential for upside. At least 385, 400 could become 6 to 9 month horizon. So my view, you can hold further.
Okay, so that's a hold, and please need not panic. Just seeing the stock falling so sharply. And with that, we are joined by Mr. Murli on the phone line from Bengaluru. Hi, Mr. Murli. Good evening.
Good evening, ma'am.
Yes.
My query is on Blue Jet Healthcare.
Okay.
I purchased about 300 shares
Yeah.
at the rate of 798 after the first quarter results.
Okay.
Considering the management interview and the margin has come down, the management says it will be restored to 53%. EBITDA margin will be restored to 53% from now. First quarter is only an aberration.
Yeah.
So what shall I am willing to wait for long term, 27 financial year.
Okay.
I expect my average is 15% per annum.
Okay. So directly coming to you, Mahesh, if I look at the valuations, so if I compare it with its peers, it's pretty much decent. So, but still, how are you viewing this counter from a long-term investment purpose?
I think if you're looking from a longer term perspective, then yes, you can buy from these level, and if any downside nearby 770, 760 zone, you can add further. In longer term, I think stock has a potential up to 850 level. So from 1 year perspective, I think 850 level could become easily. So my view hold, if anyone want to add, then add in lower, that could be a 760, 770 as if any come from these level staggered way, you can add further.
Okay, thank you so much for that. Now let's go across to Sunil joining us from Kashmir. Hi Sunil, good evening.
Good evening, ma'am.
Good evening. Please go ahead with the query.
Ma'am, I have bought Zensar Technology.
Okay.
At the rate of 850.
Yeah.
I need a view about this stock.
And are you a long-term investor or a short-term investor?
Short to medium.
Short-term investor. Okay. So Gaurav, he is sitting on a loss of nearly 25,000 with Zensar Tech, and so are you seeing any sort of positive momentum there on the charts? Is there any sort of good news for him so that he can actually narrow down his losses?
Firstly, he should not worry about his position. The stock is well placed, well structured. It is just a matter of time that it is not performing. He should hold on to his position. I'll suggest a stop at 700 and hold for the next, say, 4 to 6 months. And I think this stock will test somewhat levels close to 950 odd levels.
Okay. Thank you so much for that. Now let's go across to Mr. Jai Kishan, who's joining us from Gwalior. Namaste Jai Kishan ji. Jai Kishan ji, आप हैं phone line पे? I think we've lost the line there, but we have his query with us. He holds 1,000 shares of Nugent Software at 1,200 a piece. Currently sitting on a significant loss of almost 3.5 lakh there. So looking for a long-term view on the counter. Mahesh, what do you suggest? What should he be doing with this investment of his?
I think the current number has not come well, so stock is beaten down sharply. I think he can hold further. At least we can see 989,000 level at least. So from current view, they can hold, but yes, keep in mind from review quarter on quarter number also.
Okay. And Gaurav, I'd also like to take your view on it because I can see that the charts are extremely, in red zone. They're sharply falling. So what's your sense?
Here, I have to take a chance type of a thing here. First of all, I will not suggest him to exit at this price point. The stock has already taken a hit, beaten down too sharply on back of dismal numbers. It is better to wait for 1 or 2 more quarters and see whether a recovery is posted or not. And meanwhile, he should take a stop at 700 here and hold on to his position. I don't see the stock going below 700 market.
Okay. So there's some sort of positivity there on the chart is what Gaurav is anticipating. And with that, I'm afraid that we have run short of time on the show. But thank you so much, Gaurav and Mahesh, for being there and always, giving such wise advices. And with that, viewers, it's a wrap on this edition of Ask Profit. But please don't go anywhere as we have a lot of action lined up ahead for you all on the other side of the break.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire
Except pharma, all other sectoral indices end in the red today, with Realty Index plunging 4%, Media Index shedding nearly 3%. IT Ministry reacts to TCS's massive job cuts, calls it a regular phenomenon due to changing skill and talent requirements, and also adds that the government is working towards aligning workforce capabilities with industry demands. IndusInd Bank is back in the black as it reports first quarter net profit of 684 crore, but higher provisions and asset quality deterioration weighs on the profit. The Enforcement Directorate launches PMLA investigation into Reliance Home Finance and Reliance Commercial Finance loan fraud based on 2 CBI FIRs. A total of over 12,000 crore rupees in loans were given to companies connected to the Anil Ambani Group. US Trade Representative Jameson Greer says more trade negotiations are needed with India to determine how much India is willing to open its market. Meanwhile, Sona BLW refutes Rani Kapoor's claims, calling them baseless, says she has held direct or an indirect role in the company since 2019, adding that the reappointment of Jeffrey Overly and Priya Sachdev Kapoor was done in compliance with rules. Suleiman Saha, a Lashkar-e-Taiba terrorist identified as the mastermind of the April 22nd Pahalgam attack, gunned down in an encounter near Srinagar this morning. Operation Mahadev also neutralized 2 other terrorists. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Over the next 30 minutes, we're going to take you through the latest in markets as well as national and international news. So let's take you through how the markets fared today. We saw a little bit of Monday blues as the benchmarks ended more than 0.5% lower. Nifty IT extending its decline for the 3rd consecutive session. So all indices except FMCG and pharma closed in the red. Mid and small cap indices underperformed, but let me go across to my colleague Puneet for a detailed roundup of all of the market action.
Well, it was a day when we saw the benchmarks as well as the broader markets under pressure today, with the Nifty 50 down almost 0.6%, but still outperforming the broader markets. We saw the mid-cap 150 was under pressure for the 3rd consecutive day, ended almost 0.8% down, while the small-cap 250 also largely remained under pressure. In terms of the mid-cap 150 first, we saw stocks like SBI Cars reacting negatively post its earnings. We also saw some pressure on stocks like Godrej Properties as well, amongst others. And Suzlon Energy was the other one, which impacted the mid-cap 150. When you look at some of the key sectors, the Nifty Realty emerged as the top loser of the day. We saw stocks like Godrej Properties dragging the sector down, but we also saw the Nifty Oil and Gas as well as the Bank Nifty under pressure in trade today. Nifty Financial Services also fell for the 3rd consecutive day, and it was interesting that the Nifty IT, while recovering from the day's lows, was largely under pressure today, led by TCS and the news flow around the company slashing roughly 12,000 jobs over the weekend. Apart from that, we've also seen stocks like Wipro, which also had some kind of impact because of this, but largely seemed to recover some of those losses as well. Going forward, we mentioned that the benchmark indices have been under pressure and subsequently below the 25,000 mark. We have the long-term support at 24,700 for the time being. But going forward, in this particular week, we are seeing a bunch of earnings coming into play. The auto pack will be active on the 31st of July. So watch out for how those reactions come into trade starting tomorrow. But overall, a day that was marked by pressure across the board.
Thanks so much for that, Puneet. Meanwhile, domestic investment flows in India are showing no signs of slowing down. And as long as those flows keep coming, Indian markets will continue to prosper. That's the word coming in from Nepean Capital's Gautam Trivedi. Let's listen into that excerpt.
Let's look at the numbers this year, right? If that was indeed the case, foreigners year to date have sold $9.6 billion out of India. Now, the India growth story, yes, has slowed down a fair bit, but the fact is the future still remains extremely bright. So you have at one breath a sovereign wealth fund, as you've seen in this morning's papers, talking about making a big investment in a housing finance company. And at the same time, you have pension funds looking at deploying more money. So you've got that. But then if you look at the overall active investment community, which is within the FI side, I think that is really the question that people are asking. Why is it that they are net sellers? And there are a bunch of reasons for that. I think one of the prime reasons, if you look at it, is the fact that the Indian market, again, it's always been expensive, but today it's at the same valuation as the S&P 500. In fact, the S&P 500 is at a bit of a discount to the Nifty 50.
Meanwhile, IndusInd Bank has swung back to profit in Q1 after reporting losses last quarter, but poor asset quality weighed on the bank's profit during Q1. Now, Q1 FY26 was the second quarter since the accounting issues with the bank's derivatives portfolio cropped up. My colleague Vansh now joining us with the key highlights from the results.
The IndusInd Bank has come up with a set of numbers. There has been a decline in the asset quality, and as the microfinance NPAs have shot up in Q1. There has been a profit growth in Q1 FY26 from the losses in Q4 FY25. There has been a drop in the net interest incomes due to the slower advances growth in the company. There has been a margin improvement on a sequential basis, and the ratios of return on asset and the return on equity have turned positive. If we talk about the numbers, the net profit is up at 684 odd crores versus loss of 2200 odd crores. NIs are gone up by 52% on a sequential basis. Deposits are down at 3% at 3.97 lakh crores. Advances are down 3% at 3.33 lakh crores. And the gross NPA is up at 3.64% versus 3.13%. And the net NPA is at 1.12% versus 0.95%. So this is how the picture is shaping up for IndusInd Bank.
Thanks so much for that, Vansh. And during the IndusInd Bank con call, Soumitra Sen, head of consumer banking, spoke of the bank's expectations of stabilizing slippages in their MFI portfolio and also improving their corporate slippages. Let's listen in.
Slippages, though elevated from normalized levels, have declined meaningfully quarter on quarter. We expect slippages to stabilize by quarter 3, may extend to quarter 4, but the legacy stress subsides and new disbursements continue to perform steadily. Looking ahead, corporate slippages are expected to improve, supported by a healthier early delinquency profile. Our combined SMA1 and SMA2 book has declined to 14 bips from 24 bips a quarter back.
Meanwhile, Adani Green's Q1 profits saw a 60% uptick. The company's total revenue from operations rose 36% to 3,800 crore rupees during the quarter from 2,794 crore last year. Let's bring in Hiral for more on this.
Yes, absolutely. A strong set of numbers that have been reported by Adani Green and clearly reflected in the stock price performance as well, because the stock ended at the day's highest levels. If you see in terms of the key highlights, the growth was mainly led by a robust greenfield capacity addition of around 4.9 gigawatts, and that led to a revenue growth of nearly 36% on a year-on-year basis at 3,800 odd crores. The EBITDA saw a growth of around 28%, and that number came in at 3,042 odd crores. The margins came in at 80.1% versus 85.1%, and the net profit grew nearly 60% at 713 odd crores. Now, they've deployed advanced renewable energy technology as well, which actually aided numbers this time around. The plant performance also has been superior, and they've deployed new capacities in resource-rich sites, and this is what has led to this kind of growth. If you compare on a sequential basis as well, the numbers have been absolutely strong. And if you talk about the profits, a good surge of nearly 115% is what you've seen, and the revenues have jumped nearly 24%. In terms of the guidance, what the company has said is that they're pretty much on track to achieve the 2030 target of 50 gigawatt renewable energy capacity. Now, at least 5 gigawatt of hydro pumped storage plus battery storage is what they're looking at, and battery storage will be a key part of their future strategy. Talking about further development, 30 gigawatts of renewable energy plant is what they're developing at Khavda. So strong guidance coming in there, strong performance on the sequential and on a year-on-year basis, and that is what has aided the stock price as well, which ended at the day's highest levels.
Thanks so much for that, Hiral. A board meet of Tata Sons, meanwhile, is expected ahead of their annual general meet on August 14th. In fact, the AGM agenda includes discussions pertaining to the company's long-pending IPO and important board appointments. My colleague Sajid joins in with more details on this.
Tata Sons is expected to have a board meeting in the run-up to its annual general meeting, which is on August 14. As part of the AGM, Tata Sons shareholders will approve the financials for FY25. They will also appoint Noel Tata as a director on the board of Tata Sons. Noel Tata came in as an additional director in October 2024, pending approval of shareholders at the next AGM, which is on August 14th day. Aside of that, there are two other appointments which are going to happen, which is one of Saurav Agarwal as a director and the independent director, which is Anita Marangoli George. She's also up for reappointment in the forthcoming annual general meeting. The AGM is also likely to discuss two things, which is one, the Tata Capital IPO, which is in the process of getting coming to the market, and it's expected by end of August. And the second is a pending application before the Reserve Bank of India, wherein it wanted to be declassified as a CIC or core investment company so that it can avoid an IPO. RBI is yet to respond to the application of Tata Sons, but it is seen as one of the issues which will be discussed in the forthcoming board meeting as well as at the AGM.
Thanks so much for that, Sajid. Meanwhile, the Ministry of Electronics and Information Technology has reacted to the layoffs at TCS and said that it is working to align workforce capabilities with industry demands. Rishabh Bhatnagar now joining us with more on this.
An official word coming in from the Ministry of Electronics and IT on the TCS layoffs that have led to about a 2% workforce reduction at TCS, about 12,000 roles being eliminated. What the ministry is saying is that layoffs in the IT sector are considered a regular phenomenon, and that is because there are changing skill and talent requirements that have been ongoing for a while. But what the essence is the fact that the Indian industry remains a net hirer of freshers as well as other employees. The government continues to say that they are making efforts to ensure that what the industry needs in terms of capabilities, that is being met through training, through other sort of initiatives that the government is taking. The government has highlighted that they have launched initiatives like the Future Skills Prime, which is a reskilling and upskilling program to equip IT professionals with emerging technology skills. What we also picked up from the government earlier on in the day was the fact that no specific concern regarding these layoffs was brought to them. And hence, there's no sort of jurisdiction that they can do since these layoffs are not considered illegal or in breach of any sort of labor laws. So that is what we're picking up, with the government stance remaining that they are trying their best to upskill and reskill youth through the current technological climate and what is required from them. So that's what the government has said on this TCS layoffs matter.
Now, moving on, the Enforcement Directorate has responded to the Rajya Sabha on the investigation into the alleged money laundering and loan fraud involving Reliance Home Finance and Reliance Commercial Finance. This is based on 2 FIRs filed by the CBI loans totaling 12,500 crore rupees that were extended mainly to companies linked to the Anil Ambani Group. From this, nearly 6,931 crore have now been classified as NPAs. My colleague Shrimi joining me on the phone line with all of the details on this case.
Yeah, so in a written response to Rajya Sabha starred question on the rising incidents of loan frauds, the Enforcement Directorate details sweeping action taken in an ongoing money laundering probe involving the Anil Ambani Group of companies and key executives of Yes Bank. And ED in its note to Rajya Sabha said that, 2 FIR has been lodged, and basis of that, on 22nd July, they have registered a case under PMLA against Anil Ambani Group companies, Reliance Home Finance, Commercial Finance, former Yes Bank MD and CEO Rana Kapoor, and other unknown entities. Now, a couple of red flags which highlighted in this note included, as you rightly mentioned, over 12,000 crore of loan being disbursed to both housing and commercial finance, largely to shell or related parties within the Anil Ambani Group. Out of that, around 7,000 crore of amount were declared NPAs or being written off. Now, the complex web of these transactions reveals circular lending, where loans were, ultimately routed back to flagship firm of Anil Ambani Group of Companies. In fact, in the note, it says that Rana Kapoor allegedly cleared investment in both the companies without any board approval. And the shocking revelation here is that the Rana Kapoor wife's firm, including RAB Enterprises, Bliss House, and Imagine State, received questionable loans from all these companies. In fact, ED also cited Grant Thornton forensic audit, SEBI investigation in these matters, and in fact, it says that basis of all these findings, they have launched a search operation on July 24th, covering 60 firms plus 22 individuals linked to the diversion of public funds. And in fact, the context which ED is making, that how they are cracked down on all these sharp rise in the large value loan frauds in the banking as well as the NBFC sector is what the concern being raised during the parliament session. Back to you.
Right, Shrimi, thanks so much for that update. We'll continue tracking this case and bring you all of the details. Moving on, Sona BLW has come out refuting the recent claims made by Rani Kapoor, mother of late businessman Sanjay Kapoor. The company stated that she has held no direct or indirect role since 2019 and that she is not a shareholder. Sona BLW has also dismissed her allegations of coercion or the necessity for her consent for company affairs as baseless and legally untenable. The statement emphasized that Sona BLW is not a family-run business, affirming the reappointment of Jeffrey Overly and Priya Sachdev Kapoor that was what they claim was in full compliance with regulations. Now, they've also stressed that the dissemination of false narratives is reckless and deeply harmful to shareholder interests. Meanwhile, now the US has sought additional time to negotiate the trade deal with India in order to explore ways to optimize bilateral trade. This is the word coming in from US Trade Representative Jameson Greer, who said, and I quote, that more trade negotiations are needed with India to determine how much the country is willing to open its market. While speaking to the American media, Greer said that the talks with India have been constructive so far. Moving on, top sources have told NDTV Profit that the government is likely to rectify key drafting errors in the proposed new income tax bill. The move assumes significance as the draft bill had proposed expanding the scope of minimum alternative tax to LLPs, effectively making them liable to pay a higher long-term capital gains tax of 18.5%, which understandably triggered industry concerns. My colleague Shrimi sends us this report clearing that out.
Well, it looked like some big relief on the cards for both corporates and non-corporates entities, as government is set to make some key correction in the proposed income tax bill in line with the select parliamentary panel's suggestion. Now, sources tells us that there are certain drafting errors which could be rectified in the proposed bill, and that will be reflected in the final bill. Now, the provisions and sections in the draft bill, and some of them are actually creating quite a stir among investors as well as taxpayers on the tax treatment. And one among those is with respect to the long-term capital gains on the limited liability partnership and similar sort of partnership funds. So what happened here is that the draft bill actually proposes to expand the scope of, alternative minimum tax for LLPs. Remember, in the existing Income Tax Act, the alternative minimum tax applies to only those LLPs if they claim certain deduction on it. However, that particular rule has been removed in the draft bill, which is making the whole, LLPs and the family offices jittery, and now they are seeking explanation as it increases the tax rate to 18.5% from existing 12.5%. Similarly, on the corporates claiming deduction on the dividend has been also removed. Sources tells us that it was omitted inadvertently in the draft bill, and that will also something will be restored in the final set. Certain provision with respect to nil TDS, refunds are also some provision which are kind of creating confusion and could be restored in the final sort of bill. Now, sources said that, the government has accepted most of the suggestion of the parliamentary panel, which is around 285 suggestion, mostly directed towards the rectification in the draft bill. And they are very clear on the fact that there is no policy change in the draft bill, which, with respect to any tax rate change, etc. And in fact, the bill is listed for the passage in the ongoing monsoon session. However, given the kind of tweaks and changes which is required in the draft bill based on the suggestion, it could take some time. And that is why the passage of the bill could differ for the next parliamentary session. However, no decision has been taken so far. So for now, the bill is listed. However, we need to see whether it will be moved for passage in the ongoing session or not.
Right, Shrimi, thanks so much for that. Moving on, Operation Mahadev, a major counter-terror strike, has taken down the mastermind of the Pahalgam terror attack. The forces got a tip-off about a Chinese ultra-radio communication being active, after which the operation was carried out. They then zeroed in on the Dachigam forest, which was suspected to be the hideout of these terrorists. Now, Suleiman Shah, also known as Hashim Musa, was behind the April attack that killed 26 civilians in Baisaran Valley. In a joint operation near Srinagar, the army, the CRPF and the JNK police gunned him down along with 2 other terrorists. Now let me quickly go across to my colleague Nazir Masoodi, who sent us this report earlier on how the operation was carried out.
Well, it appears to have been a well-calibrated operation with preparations, and it has actually been the hard work of last 3 months by the security agencies. And this morning, contact was established in these mountains. Let me show you. Exactly in these mountains, where security force pinned down the 3 terrorists. Now, their bodies have been recovered. They have been identified according to security forces sources. One is Suleiman Shah, second is Yasir, third is Abu Hamza. Suleiman and Yasir, their sketches were already released after Pahalgam attack. So, the 2 of Pahalgam attackers have been killed in this encounter. And it is something not just the security forces, but the people of Kashmir were waiting for. Remember, when Pahalgam terror attack took place, entire Kashmir came out, showed their anger, came out on roads and clearly said no to terror and not in our name. So that is what, and they, in fact, I saw that in Pahalgam, those ponywalas telling security forces, take us along wherever you want to take us and we'll help you to track down the attackers. And today, security forces also said that the 2 of that Pahalgam attackers have been killed in these mountains.
Meanwhile, during a volatile discussion on Pahalgam and Operation Sindoor in the Parliament today, External Affairs Minister S. Jaishankar quashed any speculation on Donald Trump's role in brokering an India-Pakistan ceasefire. Let's listen in.
At no stage in any conversation with the United States was there any linkage with trade and what was going on. Secondly, there was, please listen. Secondly, there was no call between the Prime Minister and President Trump from the 22nd of April when President Trump called up to convey his sympathy, and the 17th of June when he called up Prime Minister in Canada to explain why he could not meet.
Meanwhile, in the Lok Sabha today, Defence Minister Rajnath Singh said India will go to any extent to fight terrorism.
ऑपरेशन सिंदूर के दौरान पूरी दुनिया ने देखा है कि पाकिस्तान में सरकार आतंकवादियों के लिए स्टेट फ्यूनरल का इंतजाम कर रही है और सैन्य अधिकारी भी आतंकवादियों के जनाजे में भाग लेते हैं। यह वही देश है जो सीमा पर सैनिकों से लड़ने का साहस नहीं जुटा पाता, इसलिए निर्दोष नागरिकों, बच्चों और तीर्थ यात्रियों को आतंकवाद का निशाना बनाता है। पाकिस्तान की सेना और आईएसआई आतंकवाद को एक प्रॉक्सी वार के रूप में अध्यक्ष महोदय इस्तेमाल करती हैं और उसके सहारे वे भारत को डिस्टेबलाइज करने का सपना देखती हैं। अध्यक्ष महोदय, मैं लोकतंत्र के मंदिर में खड़े होकर यह बात कह रहा हूं कि भारत को 1000 कट्स देने का सपना पालने वालों को नींद से जग जाना चाहिए। यह मोदी जी के नेतृत्व वाला नया भारत है जो आतंकवाद के खिलाफ किसी हद तक जा सकता है।
Moving on, Samsung Electronics has secured a $16.5 billion agreement to produce AI semiconductors for Tesla. The deal, which runs through 2033, involves manufacturing Tesla's next-generation AI6 chips at a new Samsung facility in Taylor, in Texas. Tesla CEO Elon Musk has confirmed a significant deal with Samsung Electronics for the production of Tesla's new generation AI6 chip. Musk stated on X that the strategic importance of this collaboration is hard to overstate, estimating that the actual output could be several times higher than the initial announced value of the deal. The contract is a major development for Samsung's chip-making business, which has been working to compete with rivals like TSMC. And now a quick look at some of our other stories that are making news around the country. The Delhi government is set to launch its Logistics and Warehousing Policy 2025. The government is aiming to ease congestion, lower pollution and improve trade efficiency. The draft policy proposes creating logistic hubs, green freight corridors and deploying technology-driven solutions to streamline goods movement. Delhi now handles about 10 lakh tons of freight daily via nearly 2 lakh vehicles. Key measures include relocating warehouses to city outskirts and switching last-mile deliveries to electric and CNG vehicles. The Met Department has issued alerts for heavy to very heavy rainfall in several regions across the country. Parts of the western Himalayas are expected to receive significant rain until Thursday. Northeast India is also likely to see heavy to very heavy downpours over the next 7 days. IMD has forecasted heavy rains over the next 4 days in Rajasthan and Madhya Pradesh and has advised residents in affected areas to remain vigilant and take appropriate safety measures. Divya Deshmukh beat Koneru Hampi in an all-Indian final to become the first Indian champion of FIDE Women's Chess World Cup. 19-year-old Divya beat Hampi in the second rapid tiebreaker game in Batumi in Georgia. The winner had to be decided through a tiebreaker after 2 days of intense classical chess ending in draws. The win helps Divya earn the Grandmaster title and also ensures her qualification to Candidates Tournament. Admissions in Kendriya Vidyalayas across India have plummeted to their lowest number in 5 years. Only 1.4 lakh new students have enrolled for the academic year 24-25. Union Education Minister Dharmendra Pradhan provided the data, which reveals that the overall student strength in KVs has also dropped significantly. This marks a steady decline in the enrollments over the past half-decade, raising concerns about shifting trends in school preferences and overall student intake. And that's a wrap on Profit 360. Stay tuned to NDTV Profit for all of the news and updates.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात का खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight into the show. So viewers, Monday blues for markets. Both Nifty and Sensex end the day in red, while Nifty 50 ends below the 25,000 mark. Sensex also closed 570 points lower. Most sectors ended the day in the red, with realty and media sectors leading the decline, dropping by nearly 4% and 3% respectively. So only the FMCG and pharma sectors showed positive momentum, closing slightly up by 0.3%. TCS also to cut 12,000 jobs amid weak demand and cost pressures. So layoffs target mid and senior managers across divisions. AI not the cause, but wage hikes pushed ahead. So other IT firms also show mixed hiring trends in Q1 of FY26. Investec is bullish on TCS, sticking to a 3,705 rupee target despite headlines. So the 12,000 job cuts, about 2% of its 6 lakh workforce, are seen as routine, driven by a mismatch in the employee skills versus changing market needs. Notably, this move isn't linked to AI or panic cost cutting. While margins also may dip briefly, stronger billability and resource efficiency are expected to follow. Tata Consultancy Services plan to lay off about 12,000 employees from middle and senior levels between April 2025 and March 2026. So sources have told that no concern has been brought to government so far. Sources have also mentioned that private sector terminations are not under government jurisdiction unless there is unfair dismissal or breach of labour laws. Kotak Bank was the big stock in focus over the weekend as Q1 results revealed pressure on the key financials. So provisions surged 33% quarter on quarter and over 100% YOY. So largely driven by weakness in the microfinance book, while operational numbers remain broadly in line. Margins compressed and profit growth declined. ROA also slipped below the 2% mark, though operating expenses helped cushion the blow. Tamil Nadu Mercantile Bank reported a 6% rise in the Q1 of FY26. Net profit also, to 305 crore rupees, driven by a 90% drop in provisions to 8 crore rupees, despite a 12% decline in the operating profit to 412 crore rupees. So net interest income grew 2% to 580 crore rupees, but margins fell to 3.8%. Deposits rose 9% and advances grew 10.4%. So the asset quality has improved, with gross NPA at 1.22% and net NPA at 0.33%. So the bank aims for 15% advance growth and 10 to 12% deposit growth in FY26, expecting NIM stabilization. Macquarie maintains an outperformed rating on Titan with a price target of 4,150 rupees, citing strong brand equity and growth potential in the UAE and Kuwait through the Damas acquisition. So the brokerage likes Titan's focus on premium designs and lab-grown diamonds. However, slower EPS accretion and the exclusion of the Gra franchise, which is 20% of Damas's sale, are seen as drawbacks. Acme Solar has delivered a blockbuster Q1 performance. Revenue surged 65% year-on-year to 511 crore rupees, while EBITDA jumped 68.5% to 458 crore rupees. Net profit skyrocketed to 131 crore rupees from just 1.4 crore rupees last year. So this is driven by scale efficiencies and new capacity. Margins have expanded to a stellar 89.6%, which is nearly 90%. Orient Cement has crushed expectations in Q1. Revenue rose 24.4% year-on-year to 866 crore rupees, while EBITDA nearly doubled to 182.6 crore rupees. Net profit also skyrocketed 459% to 205 crore rupees, and margins expanded to 21.1% from 13.8%. Premier Energies shines in the latest quarter with steady growth and rising efficiency. The company continues to expand its clean energy footprint, powering a brighter future while strengthening its bottom line. So revenue rose almost 10%, while EBITDA surged 53%. Net profit climbed 56% to 308 crore rupees, and the margins have expanded to 30%. J&K Bank posts strong Q1 numbers with a 17% jump in the profit and margins shrink as deposit growth beats the loan growth. So interest income is up, but cost of the funds have risen faster. So asset quality stays steady despite the NPA provisions. Laurus Labs zooms post Q1. Net profit zooms 13 times year on year on the CDMO-led growth. Revenue also jumps 31% with sharp rise in the EBITDA margins. Gross margins improve on better business mix, and API weakness partly offsets the gains in the generic FDF. Wockhart's novel antibiotic Zanuck grabs the global spotlight after saving a critically ill US liver transplant patient. Now, the patient had pan-drug-resistant infections, unresponsive to all the available treatments. So, Zanuck cleared the infection in just 11 days, enabling a successful transplant and chemotherapy resumption. So, the drug has completed phase 3 trials and targets a $25 billion global market. Brigade Group launches its new premium residential project, Brigade Avalon, in Bengaluru's Whitefield area. Now, this project spans 4.36 acres and features 206 carefully designed homes with spacious 3.5 and 4 BHK configurations. Brigade Avalon offers a bold architectural identity with private decks, light-filled interiors and flexible home office spaces to suit modern living. So the development includes a grand clubhouse with premium amenities for all the age groups. GAIL Limited is filing an arbitration claim seeking up to 639.18 crore rupees plus interest against the Focus Energy Limited, iServices Investment Limited and Newbury Oil Company Limited. Now, the claim have actually, arisen from the non-supply of makeup gas and a shortfall in the supply of gas under 2009 gas sale and purchase agreement. So, GAIL has formally submitted its statement of claim to the arbitrator, asserting that it's right to recover damages for these supply failures. Recently, the Delhi High Court has also directed the respondents to secure 158 crore rupees through a bank guarantee or assets to project GAIL's claims during the arbitration. Now, this legal move asserts GAIL's commitment to enforcing contractual obligations and protecting its financial interests amid the dispute. Dr. Reddy's Laboratories has made a significant investment of 565 crore rupees in its Russian arm. So, Dr. Reddy's Laboratories LLC Russia, which is acquiring a 45.19% equity stake. Now, this infusion has completed on July 25th and is aimed at supporting the working capital requirements of the Russian subsidiary. So, DRL Russia has demonstrated strong business performance with a reported turnover of about 2,347 crore rupees for the fiscal year of 2024-25. Now, this investment reflects Dr. Reddy's commitment to expanding and strengthening its presence in the Russian pharmaceutical market. Citi maintains a buy rating on Mahindra & Mahindra, raising its target price to 3,810 rupees. The firm highlights strong momentum in both M&M's utility vehicles and the tractor segments. So tractor sales have benefited from a healthy harvest season, while UVs are also performing exceptionally well, firing on all cylinders. M&M's volume growth is notably stronger compared to its peers, reflecting robust demand and solid rural market traction. J&K Bank reports its Q1 performance with key takeaways showing a sequential dip in the margin, faster deposit growth compared to advances, and a decline in the yield coupled with a rise in the cost of funds, while asset quality remains largely stable. So year on year, interest income has risen 9% to 3,268 crore rupees. Within the interest expense, the interest expense going up 11% at 1,802 crore rupees, and net interest income also has improved 7% at 1,466 crore rupees, and operating profit grows 13% to 673 crore rupees. Steel Authority of India reports its Q1 results with revenues declining 11.6% at 25,922 crore rupees. Now, just missing the estimates of 25,790 crore rupees there. So, EBITDA drops 20.5%. matching the expectations, while margins remain stable at 10.7%. However, net profit takes a significant hit, down 40.5% to 745 crore rupees against an estimated of 1076 crore rupees. Now, this sharp decline is actually mainly due to an increase in the stock in trade as SAIL proactively stocks raw materials. Lodha Developers reports a strong Q1 performance with pre-sales rising 10% year-on-year to 4,450 crore rupees. Collections also grow by 7% year-on-year. The company maintains its full-year guidance, targeting 20% growth in the pre-sales for FY26. During the quarter, Lodha launches new projects worth 8,300 crore rupees, while Q2 launches are limited to a new phase at existing locations. Consolidated revenue also jumps 22.7% to 3,492 crore rupees, and EBITDA increases 30% to 984 crore rupees, with margins expanding to 28% from 26%. So net profit has surged 42% to 675 crore rupees. RPG Life Sciences has reported a challenging Q1 performance with mixed business segments. The domestic formulation business grows 9.5%. The API business takes a hit, declining 22.4%. Overall, the revenue edges up 2.1% to 169 crore rupees. So net profit also sees a marginal increase of 1.8% to 26.3 crore rupees. GMDC reports muted numbers for Q1, with a slight dip in the margins, and profit also impacted by a decline in the revenue quarter-on-quarter. So the sales volume have dropped nearly 9.6%, which is reflecting a softer demand. Year-on-year revenue have also fallen 6.8%, while the EBITDA has decreased 12.6%. Margins have contracted to 23% from 24.6% previously. So net profit takes a sharper hit, declining 27.6% to 164 crore rupees. Overall, GMDC faces top-line pressures and margin compression in a challenging quarter. Car trade delivered a robust Q1 performance, marked by impressive double-digit growth across the key metrics and strong margin expansion. The company has capitalized on its solid momentum in its remarketing and consumer segments, while the OLX continues to shape into a strategic growth lever, and that also makes it the stock of the day. Adani Green Energy reported a robust Q1 of FY26 with consolidated net profit soaring 60% year-on-year to 713 crore rupees from 446 crore rupees. Revenue jumped 36% to 3,800 crore rupees, which is up from 2,794 crore rupees, driven by a 41% increase in the operational capacity to 15,816 megawatt. So EBITDA has risen 28% to 3,042 crore rupees, though the margins have dipped to 80.1% from 85.1% due to higher expenses. The company has added that 3,135 megawatt in greenfield capacity, including solar and wind projects, reinforcing its leadership in India's renewable energy sector with a 50 gigawatt target of by 2030. Zen Technologies reported a 38% drop in Q1 of FY26 net profit to 47.8 crore rupees from 76.8 crore rupees, with revenue also down 37.9% to 158 crore rupees. So EBITDA has fallen nearly 42% to 65 crore rupees, and margins have contracted to 41% despite the dip. The company has maintained a debt-free balance sheet and a 754 crore order book management, which is led by Ashok Alturi. Atluri views this as a temporary adjustment, targeting 6,000 crore rupees of revenue over FY26 to 28. So the acquisition of TISA Aerospace bolsters its UAV capabilities with 150 crore rupees in the new order secured. US President Donald Trump announces a new trade deal with the European Union, calling it a good deal for everybody. So after high-stake talks in Scotland with EU chief, the US imposes a 15% tariff on EU imports. Now in return, the EU pledges $600 billion in investments and $750 billion in energy purchases. Now both the leaders hail the agreement as a breakthrough aiming to end a long-standing transatlantic trade dispute. The $2 trillion US-EU trade deal is turning heads across the global markets, especially in India's auto sector, with car tariffs slashed to 15% from 27.5%. Top Indian players like the Tata Motors, Samvardhana Motherson, Sona BLW and Bharat Forge are poised to benefit. Now for Tata's JLR unit, exports from the Slovakia now face lower duties, while Bharat Forge and Sona BLW could actually see improved margins on their hefty US-bound exports. Now this tariff reset configures supply chains and offers a competitive edge to Indian firms with transatlantic exposure. Bharti Airtel's data center division, NXTRA, has signed an agreement with Ampin Energy to procure an additional megawatt hours of hybrid solar and wind energy. Now, this renewable power will be sourced from plants connected to the interstate transmission system, and exchange filing says that the deal supports NXTRA's goal to increase the use of sustainable energy in its data centers to reducing its carbon footprint. The Tata Sons board is set to meet ahead of the annual general meeting scheduled for August 14. The AGM agenda includes approval of the company's financial statements and key appointments and reappointments. So Noel Tata is proposed to be appointed as a director and nominee of Tata Trust. Additionally, Mr. Venu Srinivasan, Saurabh Agarwal and Anita George are up for reappointment to the board, with Anita set to continue as an independent director. Amber Group's, through its subsidiary, has signed agreement to acquire about 40.24% of Israel-based Unitronics. Now, this deal is signed for 400 crore rupees. Now, the acquisition is also scheduled to complete within 2 months. Unitronics, which is listed on the Tel Aviv Stock Exchange, supplies industrial automation products such as programmable logic controllers, human-machine interfaces, server drivers, and SaaS solutions. Vietnamese electric vehicle maker VinFast has opened its first showroom in Surat ahead of launching its manufacturing plant in the country. So the company plans to establish 35 dealerships across at least 27 cities in India by the end of the year. To support its expansion, VinFast has formed strategic partnerships with RoadGrid, TVS and Global Assure to build a network for charging infrastructure and after-sales services. The Department of Telecommunications has issued a show-cause demand notice to Tata Communications for about 7,800 crore rupees over AGR dues. Tata Communications stated that in an official note that the demand includes amounts related to disallowed deductions under its ISP and NLD licenses, with appeals already pending before the Supreme Court. The company asserts its licenses are separate from those impacted by the Supreme Court's 2019 AGR judgment and says that it's based on legal opinion. It also expects to be able to defend its case. Indian Bank has received board approval to raise 5,000 crore rupees during the current financial year. So according to CEO Binod Kumar, the bank reported a rise in its capital adequacy ratio to 17.8% for the April-June 2025 quarter. The bank does not plan to use QIP or other instruments immediately. So in addition, Indian Bank is set to launch its own UPI-based payment app, Ind UPI, so to reduce the operational cost. Now, the bank has also received approval to hire 3,000 employees this year across various levels. Security forces in Srinagar have successfully concluded Operation Mahadev, resulting in the neutralization of 3 terrorists. Among those killed was Suleiman Saha, who was known for his involvement in the recent Pahalgam attack. Officials have confirmed that the 2 slain terrorists were Abu Hamza and Yasir. So all 3 were identified as members of the Pakistan-based terror group Lashkar-e-Taiba. Following the operation, security personnel are conducting thorough checks of the commuters in the vicinity to ensure the safety of the area and maintain vigilance. The Delhi government is set to launch its Logistics and Warehousing Policy 2025, aiming to ease congestion, lower pollution, and improve the trade efficiency. The draft policy proposes creating dedicated logistic hubs, green firefighting corridors, and also deploying technology-driven solutions to the streamlined goods movement. Now, Delhi now handles about 10 lakh tons of freight daily via nearly 1.93 lakh vehicles. So, key measures include relocating warehouses to city outskirts and switching last-mile deliveries to electric and CNG vehicles. Thailand and Cambodia agree to immediate ceasefire for their border conflict. The fighting, which flared up last Thursday after a landmine explosion, has displaced tens of thousands of people on both sides of the border. Over 2 lakh villagers have evacuated their homes, with many now staying in the temporary camps. Now, a shocking act of violence has been reported in the Thai capital in Bangkok. At least 6 people are dead following a shooting incident at the Torkor market. Now, the fatalities include the gunman, who reportedly took his own life. The emergency medical center reports that 4 security guards and 1 woman were also killed in the attack. Now, the market, which is known for its agricultural product and local foods, is now the scene of a major police investigation. A regional passenger train has derailed in southern Germany, resulting in at least 3 deaths. Investigators are looking into the cause of the derailment. Around 100 people were on board the train when 2 carriages went off the tracks. Now, the crash happened after storms passed through the area. Authorities are working to determine if the weather has anything to do with it. Shubman Gill has etched his name in history, becoming the first Asian cricketer to score 700 runs in a test series in England. The Indian captain's gritty 103 in Manchester's 4th test broke Mohammad Yusuf's record of 631 runs. With an unbeaten century, Gill also joined Sunil Gavaskar and Yashasvi Jaiswal as the only Indian to score 700 runs in a test series. With that, viewers, it's a wrap on this edition of Market Express.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम, एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular.
The India-UK free trade agreement will boost many textile players as tariffs are expected or reduced to zero, right? Not expected, but reduced to zero. Raymond is presumably to be one such player with a 20 to 22% garmenting business in the UK. We'll speak to the management in a minute, but first let's get in Mahima to set up the conversation for us. Mahima.
Right, so as you rightly mentioned, the textile space is set to benefit from the UK-India FTA, and this is because the duty was as high as 12%, which is now reduced to almost 0%. Duty-free access to UK markets will provide India a level playing field with competitors like Pakistan, Bangladesh, Cambodia, China, etc. Now, in terms of the overall UK exports from India, they are right now stand around 6.6%. Indian textile outlook is also very positive. The government is aiming at almost $100 billion US dollars by 2030 in terms of textile exports. Now, Raymond has said that around 20 to 22% of their overall exports happen to UK plus the EU combined number is 20 to 25%. And this the overall expectation is that the exports that they do to UK could double in the near future. And FTA clearly puts India in an advantageous position. Now, I spoke to Amit Agrawal, Raymond Group's CFO, to talk to him about how this will benefit India as a whole and how this will benefit Raymond Limited as well as Raymond Lifestyle. Listen to that conversation. Before I go on to company specifics, just want to get your sense on how big an achievement this is for India in terms of signing a trade deal with the UK, and how beneficial is this for the entire textile space?
Thank you for having me on the show. No, it is a great thing. It's a big achievement. And we have been waiting for this FTA to happen for quite some time. And I think it is a beginning of the journey. If you see, if we have done with UK, over last 18 months we have done with Australia and few other countries. I think as you see one big FTA like UK has happened, it will open up EU on the next line. I think that will enable us Indian to export much better. And when you are getting this status, you are actually becoming a level playing field compared to what you call having Bangladesh on your neighbor, Vietnam, Indonesia. Many of these countries have got a zero duty benefit. So when we were competing, and especially in a textile sector, when you compete, the margins are quite thin. So this would make a large difference. And considering this impact of the duty, which was in the range of 11-12%, depending upon the product to product, especially in the textile sector, it made us difficult to export into these countries. Only we were able to do a very high value product. And India has got an integrated supply chain, which I think is going to be a very large beneficiary. And it creates a lot of employment. Textile industry creates a lot of employment. So that all is going to be a big boost to the Indian economy and to our foreign exchange earnings. So I think we are very happy to have this done, because we believe it is the beginning of this journey, and we will see many more to come. And Indian exports can grow very fast.
Right, most certainly, Mr. Agarwal. I was going through your con call, and correct me if I'm wrong here. 20 to 22% of your garmenting business, comes from the UK. And just want to get a sense as to how this landmark deal benefits Raymond Lifestyle as a whole.
So look at it. In my opinion, what we believe in the Raymond has got a great opportunity with UK. Because first of all, let us understand, we are into wool, worsted, and an integrated supply chain. Right from the wool fabric we manufacture, then we convert them into garment for the big labels. And UK being a colder country, there is still a lot of traction for the woolen worsted suits. So that helps us in order to grow. Now, previously what used to happen was people would get the import of the fabric from China and other places into Bangladesh, get it converted, made garment, and then send it to UK. Now that will change dramatically, because people would like to see if there is an integrated supply chain company with an advantage of the lead time, as well as there is no disadvantage on account of the duty. I think we see that over the next 18 to 24 months, I think we should see our export revenues from UK to grow. But if I recall, it was not 20% alone to UK, it is UK as well as EU. That is the level of 20-22% is that number. And I think we should be able to grow in the UK business comfortably double itself. And this business is going to be much more attractive. We have already seen, because since the month of May, you have already got this traction that the UK FTA will get signed. And we have already started to see some of the inquiries coming from the people, from the customers. But any inquiry to get converted, because there is a season, autumn, winter, spring, summer. So it will take at least 8 to 9 months. I think what we can see is only in the next year, somewhere around the same time or a little later, the traction of actual deliveries to flow through.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
When India's most trusted IT giant slashes 12,000 jobs, it's not just a concern limited to a single company, but perhaps sounds the warning bell for the entire IT industry and policymakers at large. Tata Consultancy Services, India's flagship tech titan with over 6 lakh employees globally, has decided to lay off 12,000 of its employees. That's about 2% of its workforce. It is its biggest ever job cut in history. Among those affected will be including mid and senior level management roles. Now, without explicitly blaming artificial intelligence for the job cuts, TCS has said the decision was part of a broader plan to become quote-unquote future ready, involving realignment of the workforce, AI deployment at scale, and new investments in next-gen technologies and markets. And if you look at some of TCS's recent moves, it all comes together. This is clearly not an isolated incident, points perhaps to larger troubles that have brewing for a while. In the Q1 earnings con call, for example, TCS announced that it will delay wage hikes due to global uncertainties. Earlier in Feb, it reduced the quarterly variable pay for senior employees. It also tightened its bench policy, which now mandates at least 225 days of billing every year for employees, with the permitted bench time being reduced to a maximum of 35 days. The company was also under fire from the Labour Ministry for delaying the onboarding of 600 lateral hires. Now, for an industry that was once the beacon of job security, upward growth and mobility, this is truly a rude awakening and raises serious questions, because it's not just about TCS. Is this a transition to AI that we're seeing playing out? Will we see mass firings in other top IT companies as well? Are we going to hear from other bellwethers next? Is the firing of mid and senior level roles indicative of cost saving, or something much more? And have Indian IT companies failed to reskill in time for an AI shift? Were these 12,000 people who will be identified and laid off over a year offered the opportunities to upskill if that was what was required? Have large Indian IT companies underinvested in the AI transition? These are some of the questions that we'll be exploring in this show. Kamal Karnat joins me now. He's co-founder of Xfino. Ramani Dati, CFO of Teamly Services, with me on the show. I'm speaking with Harpreet Saluja, Advocate, Bombay High Court and President of NITES, that's Nascent Information Technology Employees Senate. They've put out a statement also condemning what we've seen. Ashank Desai joins us, Chairman of Mastech and a veteran of the IT industry, really. Mr. Desai, I'm going to start with you just to get your sense of what is happening, how you see TCS's decision. Is it a one-off? Is it cost-cutting? Is this just a start of a tactic shift across the industry?
Tamanna, it's great to see you.
Likewise,
after a long time, not on TV. Of course, we see you very often. But coming back to your question, Tamanna, see, I think one has to look at IT industry over last 30-40 years, which is where I come from. And some of the inflection points that we have come across are not less. Just after Y2K, when this whole dot-com bust came about, there was this issue of slowdown and job cuts and so on. Then came 2008-9 financial meltdown. We saw an issue there. Then came, of course, COVID, and first reaction was about job cuts and so on. So I think one has to look at the context, is what I would first say that. So I think ascribing everything to AI may not be a fair answer to all this. The issues that IT industry is facing are not just AI. AI, of course, is impacting us, but it is also about the slowdown that are happening because of tariff and related issues in US and some uncertainties globally. So I think industry is trying to realign itself to the coming era of AI plus uncertainties in demand and so on, which have nothing to do with AI, as I said again, and then making those calls. So I think, and IT industry, as I said to you earlier, have passed through some of these three and come out well out.
No, that's
so I am coming from optimism that yeah, this will happen and we will come out very successfully out like all other challenges we had.
So, Mr. Desai, I'm sure you're feeling optimistic as someone from the industry. There are a lot of employees right now who don't know if their number is up, who are definitely not feeling optimistic. There are various ways that we need to look at this, and one very important way to look at it is how the IT services industry and the high quality jobs they offer is something aspirational for middle class India. It also leads to an economic virtuous cycle. These are the people who are buying those expensive apartments and paying those EMIs and boosting that kind of consumption in the industry as well. So there's more to this than just what the IT industry is going through. I want to come to Ramani on this, Ramani Dati, and how you see this panning out in terms of jobs. This is not at the lower end. This is mid and senior level. If I add to this, Ms. Dati, on what is happening with beginner salaries in companies like TCS and others, those have not moved over the last decade or so.
Hi, Tamanna. Yes, definitely we are seeing a big shift, especially on the IT services side, because to some extent, IT services also haven't invested in upskilling their employees or even in reinventing themselves and moving up the value chain. So while they have right now come under cost pressure and other challenges with respect to decline in the overall discretionary IT spending and global headwinds, apart from that, during COVID years, many of the IT services also have expanded their overall capacities. Some excess capacities also have been built. To some extent, that correction has already happened over the last 2 years. But the ones that we are seeing right now is definitely a huge shift. And what we are noticing on the ground is that many non-IT companies are setting up their own internal IT teams. Earlier, they used to outsource a large part of their transformation projects and IT development projects to these IT services companies. But now many of the large organizations are preferring to set up their own internal IT capacity centers. So because of that, even like at TeamLease, in the number of hirings that we are doing right now, majority of the IT hirings that we are doing right now are for the non-IT companies. So it's not a complete bad news for the skilled IT employees, because the GCC hirings are good and senior level, mid-level IT hirings in non-tech companies are good.
But ma'am, will these GCC hirings absorb mid and senior level? They seem to be stuck in a dead end over there. Is there space for the manager level?
No, definitely it can't absorb and completely offset the numbers that we are losing on the IT services side. Definitely no, because the volume of hiring that happens in GCC and non-IT is relatively much smaller compared to the IT services hiring. But having said that, for high-skilled jobs and which are the niche technologies, there is definitely demand in GCCs and non-IT sector. If employees can upskill themselves and definitely on these niche skill set, there is a scope.
You know, Kamal, let me come to you on this and how you see this whole situation. TCS in its statement, and we'll pull up bits of that statement, saying that, you know, they're going to offer all kinds of support to the employees, etc. This is part of themselves being future ready. Do you see this as just a start when it comes to bellwether large IT companies? Because this is the biggest one, and if this is about protecting margins, then others will follow suit.
Tamanna, there's a bit of an inevitability around what's happening around us. If you look at the last 3 years per se, the clear tectonic shift has been the number of net additions, global capability centers in India have added. And I think clearly the IT services companies have missed that bus. If you look at the number of people global capability centers added in terms of employees over the last 3 years, between them and the big four, the consulting companies also are in a way loan staffing companies. So they have sort of become competitors to IT services companies. So the last 3 years, the IT services companies added a net number of about 3.5 lakh people, whereas GCCs and consulting companies put together added close to about 5 lakh employees. So collectively, if you see, the IT services companies moved from what you can call as a base of 22 lakh to 25 lakh, number of employees in this time, whereas the GCCs and consulting moved from 16 lakh to 21 lakh. So I think clearly There is a bus that IT services companies have missed by not focusing enough on GCCs. And you can see that they've made a slew of announcements about, exclusive heads they've appointed to focus on GCCs. So if you look at the number of people employed by GCCs today, I could say that almost 50% of them could have been employees that, IT services companies could have got. So that's one. Two, if you look at the global scenario, the global product companies, the FANG, as we used to famously call them, the Metas, the Apple, the Amazons, the Microsofts, the Netflix of the world, and the Googles, they were one of the largest customers for the IT services companies. If you look at last two and a half years, they have cut down almost 1 lakh jobs in US. So in a way, that demand also has cut down for the IT services companies. Third, definitely there is a demand issue, tariffs, the wars, all put together has sort of slowed down, and these companies have been talking about discretionary spending coming down. And clearly you cannot forget the threat of AI, which is looming. Though you clearly see the attrition refilling numbers, though it still shows that linearity is still at play and they've not really cut down too many numbers. But if you look at the first 4 things that I said, global capability centers, the consulting companies eating their pie, the product companies, the macroeconomic indicators, and AI put together, clearly is putting the pressure on the IT services companies. And like I said, there's a bit of an inevitability that we have to see this situation today.
So I don't know if it's a like for like in terms of the numbers. Yes, TCS in this quarter has said that they will have 40,000 people that they will add on in FY26. But then if you're letting go of mid-level managers, what happens? Just for an additional point here, when we're speaking to experts today, they're saying there was a time when managers in large companies like this would handle 5 to 7 people in their teams. Now a manager can handle 60 people, 50 to 60 people in a team. So your numbers are going to come down. My question is this really something to blame on TCS? Because Harpreet Saluja, I'm coming to you on this and I'm reading out the statement that you put out in which you are saying that this raises ethical and legal questions. At the end of the day, Mr. Saluja, this is a private company. This has a responsibility to shareholders, to its board, and its intent is to make profits. They are within their legal rights to cut jobs if they need to.
See, Tamanna, though it is a private limited company, I do understand, but the laws and labor laws are particularly applicable to private organizations also. They currently falls under the ambit of Industrial Dispute Act and the Shops and Establishment Act also. Particularly, every TCS office across every district might have registration and license under the Shops and Establishment Act from particular Labor Commissioner office. So coming to the legal perspective, yes, the laws are applicable to them. The retrenchment, if these lays off, if the lays off are done without the prior permission of the government, whether it is a private company or a government organization, they need to take a permission under this act from the appropriate Labor Commissioner office and authorities before initializing these layoffs. Once they permit the layoffs, then the company can go ahead and do the retrenchment. Coming to the human perspective of it is just not 12,000 is just not a number on Excel sheet or a spreadsheet. These are 12,000 jobs and 12,000 employees who are human capital to this organization. And if we are particularly talking about the mid and senior level management, these people have spent approximately 5 to 10 years or more than 10 years tenure in this organization. They have given their blood and sweat. They have given the best possible years of their lives to this organization. And what the organization is giving back to them on a Sunday afternoon, you are just sending one email to the employees that we are trying to get future ready and we are just laying you off.
No, Mr. Saluja, this is not an email to employees. They have not started the process and identifying people.
No, they have sent an email yesterday on 27th of July.
Okay.
It is on employees portal. I have gone through that and I can share it with you as well.
So okay, so please share it. But Mr. Saluja, have employees individually started getting notices from TCS? And
they are saying that it is spread over for financial year 25-26, but they have already started the process. They have put people on bench and they are pressurizing the employees they're forcing them to resign just to mitigate this retrenchment section from the Industrial Dispute Act. They are pressurizing the employees to resign on their own. They have, this is an unethical and illegal practice that we are setting up people on 35 days notice period, that within this 35 period, if you are not able to come out of the bench and if you are not able to find out the appropriate projects, then you will be, terminated from the job.
Okay.
And this is highly unethical. And one point I would like to make clear, see, Tata, just not talking about Tata Consultancy Services, the whole Tata group is a very big conglomerate. So, for every Tata company like Tata Steel or any other Tata organization, there is a separate IT department. So for these 12,000 people, why there is no opportunity of redeployment given to other organizations within the Tata group only?
Mr. Saluja, but this is not a government organization that they have to, redeploy people. They have a choice not to. I think what we're talking about is, and let's be very clear, we are not saying that TCS is not well within its rights. In fact, maybe a lot of IT analysts we talk to are saying this is great for those who hold the stock, because this means the balance sheet will be healthier. But there's a very real human cost as well. I'm trying to understand from the jobs purview. And let me come back to you, Ms. Dati, and a reaction, if you can, give to some of the points that Mr. Saluja made. The way this has been done, do you think there's a requirement to understand if there were enough attempts at reskilling? Because clearly, a company of the size of TCS will have to continue to hire people with talent. We've heard that again and again. Specific talent will be required. Should there not be an attempt at least to reskill those who are existing within the organization and see if they make the cut?
So Tamanna, to our understanding, definitely attempts have been made to upskill their existing employee base. Otherwise, this number would be much larger. So right now we are only talking about 10 to 12,000 numbers. So if not for the internal L&D programs conducted by these large IT services, the number can be much larger. Also, I want to highlight the fact that almost after 6 to 7 quarters in a row, this is the first quarter where we are seeing green shoots in terms of new hirings being done for IT services companies. So this includes TCS, Wipro, and other large IT services companies. So that means they also have started hiring new talent, definitely at mid and not much at senior level, but definitely at entry and mid level. And to accommodate this cost, maybe they have to take some amount of restructuring in existing base. I completely understand the implications that it will have on the employee side, but in terms of organization, to some extent, they have made efforts in upskilling their talent base, and now they also have started hiring new employees.
In terms of the demand that you're seeing for talent within IT companies, has the requirement changed? Ms. Dati, has it changed? What does this mean for those who are right now preparing themselves for these jobs?
No, in terms of hiring, the numbers are much lower what it used to be 2 years before this overall IT headwinds. The numbers are still very small, but it's a good recovery because, as I said, almost after 6-7 quarters, we have started seeing some green shoots. And in terms of skill set, right now, they're largely at higher end skill set and mainly areas like cloud security, AI, ML related jobs, and niche technologies, new age technologies is where we are seeing jobs. The traditional coding and DevOps, we are not seeing that many new open positions at this stage.
So then my question to you, Kamal, is what happens to all of those coders who are training out there? How does this work out? And my question there for Kamal Karant, how does this work out? And going forward in absolute terms, will companies just need much fewer people to do the same work in terms of IT companies?
Maybe the indicator of most of the companies that we speak to is that we might need lesser workers going forward. But when you look at the open jobs, Tamanna, out there, we're looking at a steady number of IT open jobs. And specifically, if you look at the last 6 months, we have seen a kind of a stagnation of open jobs. In fact, what used to be almost 122,000 tech jobs that was open in, let's say, in Jan, the June numbers are at about 1 lakh numbers. So you can clearly see that, it is sort of coming down. So that's one part of it. But you still, on the positive side, if you see, you can still say there are 1 lakh open jobs in the tech sector. 65% of them are from IT services companies. So I think if you look at the overall job openings out there, clearly there is a space for people who are getting, let's say, retrenched for an opening out there. But there again, if you look at the mid to senior level, the IT services industry, especially the top six, if you look at the top six of, let's say, the Infi, TCS, LTI, TechM, and HCL kind of companies, collectively have a very large number of people who are above 15 years experience and above. Now, just looking at the numbers as you're speaking, so the 10 years and above numbers are in the range of almost 5 to 6 lakh people. So there is a fair number of people whom you can say are experienced and mid to senior level, and that could be an area of concern, and that many jobs commensurate to their experience and maybe skill set may not be available in the market, and that could be a concern. As far as people who are younger, the number of job openings for them, between the 4 to 10 years experience range is still higher in the market. It's a challenge for freshers, people who are studying computer science, especially, if you look at 2.5 lakh engineers are passing out with computer science qualification out of the 8 lakh engineers who are passing out. So there is a bit of a worry because the IT industry last year absorbed about 1 lakh of freshers. Looks like the numbers could be a little less than last year. Yes, a bit of a worry if you ask me.
And what are the fees these people are paying to get those qualifications? Those computer science courses are not closing overnight. They're going on churning out more engineers who may not be required in that large a number. Mr. Ashank Desai, you started by striking an optimistic note on what happens to the industry. What happens to the workforce of this industry, the lifeblood of this industry? I think you're on mute, sir.
I'm sorry. Let me answer you the question about keeping employee ready for tomorrow's technology. All of us have trained 70-80% of our people in AI, cyber security and cloud areas. So it is not that we have not made everybody ready. We spend tremendous amount of time, money and effort as an industry compared to any other industry in terms of training people, because that's the cost of doing business in any case. And that happens, when that happens, please also realize that there are certain persons who may not be able to cope up with some of these changes. So one has to look at the overall workforce that we have and how many people can cope with the changes, etc., etc. So that's one point. Coming back to your question on the scales, see, I think this AI issue has an impact is one part. Do you want to discuss that, or do you want to discuss the uncertainty because of demand issues in the economy?
I want to discuss the people. AI issue is now blue sky, right? You have maybe some people saying it's not AI, maybe it's headwinds, maybe it's Trump's fault, maybe it's tariffs. What about the people, the lifeblood? You are churning out people for jobs that are no longer existing or do not matter as much to the largest company in this space. Isn't that a red flag, an alarm bell, Mr. Desai?
See, again, as I said, I take a very long-term view of all of this.
Okay.
Last 30 years, 40 years, there has been a constant churn of skills required in the industry. I come from area where we were doing punch card for doing programming. I'll not go there. But the point I'm making is, this change in the skills required is nothing new. We continuously train people all the time. There are some people who do not get trained so fast, they remain behind, but they continue in the industry, or they may go to some other industry, so on and so forth. So I'm saying what is happening is not something catastrophically new. Yes, we have to be cautiously looking at the impact of all these changes, and we are looking at it, A, by training our people so that they are ready for tomorrow. 2, restructuring ourselves to meet the structure of our whole industry so that we meet the customer demand. Please remember, we serve all 500 Fortune companies as an industry, FTSE industry, so on and so forth. We need to meet their demands.
No, of course. You need to meet customer demands, shareholders, run the company completely. Just a quick word from Mr. Saluja. You've heard all of the commentary. This is changing times. It's going to happen, Mr. Saluja. There's no point blaming the company for what is inevitable.
There is a strict need of stringent labor laws, I believe, because if we are talking about numbers and profitability of the organization, I do personally understand that they have opened a company to make profits only. But the thing over here is, if you are making profits and in May only, if your CEO salary is going and it is getting raised by 4.8% or close to 5%, you're taking 26 crores of rupees per year as your remuneration, then why, when it comes to increasing the profits, the employees in the mid-level management or the junior level, they are taking the hit of this? Why only the layoff is the only possible solution that is visible to the organizations when it comes to cost cutting? See, we need to have a human perspective also to it. We need to add some sort of human perspective that these are the employees who build the organizations. These are the employees who stand by the organization.
There is no doubt a huge human perspective. But maybe this is just a starting of a problem which needs a comprehensive solution, because
absolutely,
because like I said, this has a ripple effect, right? These are the jobs that provide salaries to boost an economy. And then if that dries up, then where are we going from here? I'm completely out of time. I will have to thank all of you for joining us on this special edition. We'll continue to track the story very closely right here on NDTV Profit. There's a stock impact. It means a lot to investors, workers, companies. Are mid-cap IT companies taking the boost ahead, and have they planned better? All of these questions will come up. Another question is also that these companies, the large IT companies, are very cash rich. They provide great dividends to their shareholders. Should some of that have been invested in better AI preparation? All of these questions will linger for many, many days to come. That's all the time we have. We'll take a very short break. We're back with all the latest business news on the other side.
हेलो, बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो, बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about
Hi, thanks so much for joining in. We're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. We've got a great show lined up for you. On the one hand, we're talking about something that one of you pointed out on social media. And we were discussing about balanced advantage funds last week. And one of you said, why don't you look at balanced advantage funds and compare them with multi-asset funds and talk about what the commonalities are and what the differences are and what you would use each of these categories for in your investment portfolio. And in the second half of the program, we'll talk about what you should bear in mind, one, before you choose to buy an electric vehicle, and two, if you are in the market for a second-hand car, as a lot of people are, then what is the checklist that you should follow? But let's start with the first conversation. We got Sharad Tandon, who's the founder of Invest at Ease, joining us at the start. Sharad, thanks so much for taking the time. Let me start with that question. It's a pretty basic question, but I think it would benefit a lot of people. What is the difference between a balanced advantage fund and a multi-asset fund, and how would you use the two?
So, both of them, as the name suggests, are a combination of two sorts of asset or more assets. So, balance includes equity, debt, and to an extent arbitrage fund to maintain the taxation advantage. While multi-assets, you can have equity, debt, commodities, and also foreign equity. Now, both these product categories are slightly more riskier than the pure debt fund. Balanced advantage fund is slightly a notch higher than the pure debt fund. MAF or multi-asset fund is slightly higher than the balanced advantage fund also. For people, generally, the guidance is, if you're looking to park your money in, say, fixed deposits for more than 12 to 18 months, BAF is the ideal like-to-like performance. The only sense of being cautious there is, it will be slightly volatile, unlike a FD, which is a straight return. It will give you more or less in the range of 8 to 12% return, depending on timing. If you're lucky, like last 1 year, where equity was slightly stable or positively biased and interest rates were falling, your BAF will give slightly far more higher than the FD returns. While in the multi-asset funds, you need to be cautious of 2-3 things, in the sense, when as an investor, I am looking at sort of creating a bucket for myself individually in multiple schemes. Instead of that, I am taking a particular fund. So in that light, I need to be very cautious of what sort of fund I am selecting to invest. It will be slightly more risky than BAF, but better than the lot of other options we have, like pure equity, which are extremely volatile.
Let's get into the nitty-gritties and how to select, because as I understand it, in the balanced advantage fund, the relative commonality of strategy is more than in the multi-asset fund. The divergence of strategy is more in the multi-asset fund strategy, because the requirement is to have at least 3 asset classes in your multi-asset category, and the stipulation is to have at least 10% in each of these 3 categories. And so therefore, it's a pretty open landscape for a fund manager to choose from. So when you're talking about the balanced advantage fund, how do you select? And then we'll get into multi-asset.
Yeah. So for the advice which we typically give to all our investors on the balanced advantage fund side is, and that's an empirical guideline. So please look at your own risk profile before selecting the funds. We probably, to enumerate my point, we'll probably take some examples there also. So balanced advantage fund, I'm looking at slightly more risky than the FDs, a notch higher, but my risk profile is still low to moderate. Now, I need to be cautious of the fund manager with a longer track record, and the consistency is important rather than volatility. So our advice is generally to look at a larger fund houses like Prudential or say SBI or SDFC or say Nippon. While if you look at pure absolute return, there are new fund houses like Mahindra and White also who have done purely absolute return in terms of performance. But for me individually as an investor, what will I look? If the equity profile of the equity portion of the balanced portfolio is matching my need, and typically in the BAF fund, our advisor is stick to the fund which holds the large cap funds, large cap stocks. In the debt portion, because it's slightly, I want a security, I will look at a portion of the debt which gives me slightly lower end of maturity rather than longer end of maturity in case interest rate cycles move negative to us. Because in a debt, the valuation returns are like a seesaw. If interest rates go up, your returns are high. If interest rates go down, your returns are go up, returns are low. It's inversely proportional. In that scenario, we need to be cautious of these two and how much of the portion of equity allocation is part of the arbitrage. Because arbitrage is very safe, defensive sort of bucket within the portfolio. And I'm saying safe because fund houses cannot carry a naked long or naked short depending on their view. And at the end of the month, the maturity of the expiry of the futures, the price point and the market value will come to and meet.
Yeah.
So you are only making returns on that volatility.
So therefore, with all of these parameters in mind, Sharad, and I'm not asking you to have recommendations, but based on these filters, which schemes are top of mind?
So for us, the way we look at it, in this set of BAF, if you look at as an investor, there can be two categories of the investors, which are one is bucket which is slightly okay with the volatility, and one is a bucket which wants a very defensive. So in the defensive category, the top of the chart which comes to the mind is something like Prudential BAF, because they've been very dynamically managing their net equity exposure. And we can look at last 7, 8, 10 years record, you will find that. Now, in the BAF, the other category is, which is slightly aggressive. So which is your something like say Axis BAF or SBI BAF, which are large fund houses, Nippon BAF. But in the equity portion, they might still go with some mid and small cap exposure and probably play on the duration of the fund on the debt side also, which can result in slightly far more volatile compared to Prudential.
Okay, understood. Now, multi-asset you've spoken about can be slightly more volatile, and so therefore somebody has to bear that in mind. And 3 to 5 years is what you've identified as the ideal time frame to hold something like this. What would you look at? Because as I've mentioned, the strategies can be pretty diverse. Something like a Whiteout Capital has traditionally had more gold. Something like an Edelweiss multi-asset fund has had more arbitrage. So how would you look at it?
So perfectly captured, Alex, on that side. So how do we look at multi-asset? Because it's a combination of different risk profile within one namesake. So let's go take some example and we'll elaborate on that. For example, a Bajaj Finserv, a new fund house, say probably with a lesser legacy, not the group, but the fund house itself, plays only with debt, gold, silver, equity. That's where it will play into. Someone like say Nippon multi-asset fund will play in the foreign equities also. While someone like say Prudential will play into silver, gold, and base commodities like copper and agri also. While someone like Edelweiss, as rightly pointed out, will be far more conservative with the arbitrage being a larger portion of allocation. There are examples in the fund houses where you will find something like people taking exposure to currency also as an asset. Now, as a retail investor, the problem we face is we might know an asset class, 2 asset class, 3 asset class, but not a combination of all. And how of these all asset class are correlated to each other, whether directly, inversely, and what is the difference in terms of convergence ratio in terms of their performance. For us, the way to look at it, each of these cycles, whether it's interest rate or a metal cycles, typically takes around 3 to 5 years of time period to play out. If you're lucky and you've got into a mid-train and probably 2 years is where you'll make money. If you are unlucky, you will start and you'll have to stay 5 years. That's where we say ideal scenario, 48, 50 months, 60 months sort of scenario to hold ideal.
Again, because of the changes in the way that these funds are taxed, they become more attractive, don't they? And fund managers do tweak things to make them more attractive post-tax as well.
So not necessarily. So the catch there is because foreign equity still is considered as a debt allocation. for tax purposes. So, for example, in Nippon, their constant equity exposure is to the 50 odd plus minus 2, 3, 4 percentage point depending on market valuation. But the rest 15%, 20% goes to foreign equity. So more often than not, you'll find something like Nippon MAF, a slightly stable fund, because they will ensure the equity allocation doesn't exceed, but it will not have the tax advantage of equity taxation. While in some other funds like Prudential or say Axis or SBI, you'll have the advantage there. BAF is very clear. Most of the fund houses maintain more than 65% allocation of equity and arbitrage put together. So for all practical purposes, if you hold beyond 12 months, long-term capital gains, less than 12 months, short-term capital gains, and that's how it will be treated.
Okay.
But the best part is, and Alex, I'm just adding this point on this is,
yeah,
if someone is looking at doing a sort of regular income, because these are the risk profiles of clients who are slightly moderate to low risk, the SWP sweetens the tax impact. It reduces the tax impact. You can do a reverse of SIP.
Yeah, that makes a lot of sense. And also the other tax aspect that you need to bear in mind is that if you are shuffling between fixed income and equity, then you don't have to do that, and you don't have to pay the tax at each point because the fund manager is doing that for you, and so there is no tax implication. Sharad, thanks so much for joining in, and this has been an insightful conversation.
My pleasure, Alex. Always pleasure to be with you. Thanks, Atanbir.
All right. So that was to the specific question that one of you had to compare the two, multi-asset funds as well as balanced advantage funds. But that brings us to the second part of today's show, and I'd like to talk to you about automotive purchases. And of course, the headlines a couple of weeks back or last week was Tesla launching in India, but there's so much to choose from in the electric vehicle space. And also, I was having a conversation with somebody recently, and they're saying, oh, it's getting terribly costly to go to office in a cab every day, and they're thinking of buying a second-hand car. So what are the economics of it? What do you need to bear in mind? I'm joined today by Hormuz Sorabji, who's editor at Autocar India. As you probably know, you probably recognize him. Hormuz, thanks so much for taking the time. Let me start with that first conversation, right? Electric vehicles. I must confess that I have been hesitant to go for electric vehicles, and I say that my next car in probably 4 or 5 years might just be an electric vehicle, because I don't know where the technology is right now, and I think that the technology might just change very dramatically. What do you think somebody should bear in mind before buying an EV?
Well, I think, clearly, as you said, the tech in EV is fast evolving, but that doesn't mean, today's EVs are anything but good. In fact, I think as city cars, EVs are an absolute no-brainer if you have the possibility to charge at home, because charging in public places is still not very convenient. But if you have a facility to charge at home or in your building, your society, they just make absolute sense. The only downside really I see is the resale values of EVs are not great. We've seen that residual values plummet. But I think net, just the way they drive, the fact that they don't pollute, which makes me feel good, and the fact that they're pretty reliable, though there are software issues which on certain brands, but not all brands. I think the time is right actually to jump in for an EV if it's just going to be for city commuting.
Let's talk about a couple more then, because Hormuz, I would imagine that the maintenance cost of an electric vehicle would be lower, because you're not worrying about oil, and you're not worrying about how good your engine is running, various other aspects. If the battery is okay and your powertrain is okay, you're okay, right?
Yeah, that's right. So I think typically the normal, let's say service parts like oil, filters, all that, you don't have to worry about in an EV. But of course, there are two factors on it. One is, of course, the life of the battery, which still for many is a concern. But, as technology improves, everyone's giving an 8-year warranty. That doesn't mean the battery only lasts 8 years. It means it's covered for 8 years. You will get a drop off in performance after 8 to 10 years, which is quite natural. But I think, if you keep the vehicle for so long, you will have more than recovered a lot of, the cost penalties just by way of how cheap it is to run. The other issue which there are with EVs right now are software issues. We've seen that, especially Tata Motors has had a lot of software issues and been a lot of complaints on that. So again, but this is, something you can with an OTA improve. It's not hardware. So I think the beauty of software is that you can continually keep updating the cars with the latest software. And that also can be fixed, though I must say the EV industry is going through a little bit of pain right now in this transition where they're trying to, just make sure that the software works properly towards what we call a software defined vehicle, where finally the software will be controlled by one central unit rather than multiple pieces of software trying to talk to each other, and that's where usually the problem comes. But I think overall, other than this, EVs in terms of maintenance are much lower than ICE vehicles.
Would you say that at this point, and Hormuz, we've spoken repeatedly over the course of the last several years, and I remember one particular auto expo in New Delhi where everybody came out with an electric vehicle. That was the time where the Mahindra E2O and nobody else had launched, right? And then suddenly you saw a flurry. So would you say that conclusively right now, Hormuz, at least for city driving and in the vicinity of a city driving, that range anxiety is out of the window?
Absolutely. I think for city driving, EVs are an absolute no-brainer because really you don't even have to charge it every day. But I think, again, there's a rider to that. You should have access to easy charging because that sometimes can still be difficult. Today, societies are hesitant to, let you set up a charger. They seem to be the biggest bottleneck. In fact, there should be a PIL, for a right to charge. I think you should have the right to charge. And I think that's very important for really large-scale EV adoption to happen. So if you have easy access to charging, EVs in the city is an absolute no-brainer.
I mean, if you go to London, then you have even street lights where you have the facility to charge overnight. I wonder if that is something that down the line can be facilitated. But there is quite a range of options available. Now, Hormuz, talking about the money that you put down to buy an electric vehicle, they're not exactly cheap. But they start relatively affordable and they go to the obnoxiously priced. So I'm just wondering from the technology perspective, ultimately you're buying a great battery. In the case of Tesla, you're buying the availability of fast charging, which is not really available right now, but the possibility down the line. Is there really a very dramatic shift in what you receive as a buyer if you're putting double the money you would pay for, say, a Tata?
Well, I think, I have to say that, it's the cost difference between